Well, welcome everyone to another portfolio update here on The Last Investor. My name is Dan, and it's been a while since I did a last portfolio update, but I thought I'd better bring this to you. For those who've seen my videos in the past, I think you would see that my portfolio has significantly changed. So I'll go through those changes that I've made, and how much of an impact it's had on my portfolio since when I first started. And also, I will talk about my thoughts about the various changes that have been made to the Freetrade app, and whether I like it or not. I'll give my views about that. And of course, I'll be interested to see what you all think about that as well. So, without any further ado, let's get straight into it. So, as you can see, my portfolio now has a total of about 15 shares. So it's significantly scaled down. I think I previously had near enough 25 odd shares. The only shares that survived from my last video probably are Rio Tinto, Aviva, and Carnival Corp and Crest Nicholson, Centamin, of course, and Trig Renewable Infrastructure Group. Most of these other stocks are pretty much new. So Unity Software is new to my portfolio. I've put about $600 into it, or £600 should I say, and it's up 3%. I think I started buying around the 29th of September, and my average purchase price was around $94 per share. I think I was able to get about $90 per share as well, and $82 per share. So it sort of varied, but I kept buying the dip basically. My aim was to, or my aim still is, to get this up to about £1,000, and then I'll keep it at that. I mean, Unity is a long-term hold for me because it's a really up-and-coming company. It specializes in providing a software or an engine upon which gamers build their games. So once gamers build their games on that, to be honest, they're going to remain customers of Unity. And if they do very well, then they become monetized, and they start to pay Unity for it. So it's a really sticky business for Unity, and I think they're probably one of the largest gaming engine companies. And the other thing I like about them is that they're also into real-time streaming, real-time 3D gaming and real-time 3D applications. So it's not just about gaming, but also it's for other companies may want to use their products for use their platform for creating products which people can then use on a real-time basis. I think the best example would be something like IKEA, for example. You can use augmented reality to sort of like place your sofa or your bed or anything that you're looking to buy into your property to build those images in 3D. So it's really, really good, and I think there's a huge growth potential for this stock. So hopefully, over the next year or so, we'll see if this 2x's, 3x's, 4x's, 10x's for me. But that's the plan: is to buy these stocks when they're still relatively new, and hopefully they'll 10x in the future. Then Greatland Gold, I think I've actually had Greatland Gold for a while, and it's been doing well. It's still doing well. It's 57% up, which is great. Then Slack is another stock that I just bought, and I've really just invested heavily in it. Again, I'm trying to get Slack up to £1,000. It Before I was able to get it up to £1,000, the damn stock just kept going up, so I had to abandon that idea. I got up to £900 in terms of my total holdings. As you can see, I started buying aggressively around September time as well again, and my average share price was roughly around $24, $25. So yeah, $24, $25 per share. So all in all, it's been good for me. So far it's up 20%, as I said, so I can't complain too much about that. And again, Slack is another company I want to hold long term. I think what I like about Slack is they're not just sitting on the one product that they have, which is it's supposed to replace your emails, your standard emails, because they have channels, and those channels are supposed to be a much more efficient way of communicating between companies and between individuals within a company. So you can search for communications via channels, and communications recorded via channels. So you search subjects. So it's supposed to be a really, really good way of communicating. Um, so I really like their forward thinking, but then they're not just sitting on their laurels and saying, "Oh yeah, that's all we're going to do is communications, and that's it. We're not going to do anything else." But they're actually looking at other ways of bringing us into the 21st century in terms of other ideas of how to utilize technology to improve communication. So I really like their forward-thinking approach, and I think this company is going to be they're going to be creating a lot more technology that's going to generate revenue for the company going forward. So I'm quite keen on them. I think that they're a company that's got a lot of runway to grow, similar to how your Apples and Amazons and Microsofts, they just keep innovating and keep growing. And I think Slack is one of those companies. So I want to buy that. I want to buy it now at this early stage and just watch the company grow. So again, I've got a lot of faith and hope and belief in the companies. Hence why I want it in my portfolio long term. So that's Slack. Aviva, I don't need to say anything about Aviva. I've also increased my share in Aviva because I don't think I was up to about £900 at the time that I did my last video. But as you can see, I did do some more purchases. So, but it's not that much really. But yeah, I've got it up to £900 now. So again, I wanted to get all of my stocks up to about £1,000 for each of them. Rio Tinto is also about 929. That's gone up a bit. It's now up 13%, which is good. And Editas, these are the companies that have now really gone aggressive on. Editas, it's up to £1,000, but obviously 10% of which is a gain. So I've gained 10% since having purchased new shares in it. Illumina is another one that I really went aggressively on. It's dropped in price, but it's reached my limit. I'm not buying more. As I said, each stock I want to have £1,000 as a baseline for each stock that I'm holding long term. So I've already reached that for Illumina. I'll keep it at that level. Illumina's got some fantastic things coming ahead in the future for it. It bought a company recently, which is called Grail. And Grail really is going to complement Illumina's original business because they're the main company when it comes to DNA sequencing machines. That's their bread and butter. They're the largest manufacturer of DNA sequencing machines, and if you go to any place, any hospital, any clinic where they do DNA sequencing, the likelihood is that the machines that they use or the machines they've used in the past would have been an Illumina machine. So they are a big company in that sector, and they're branching out now, and they're looking to sort of like purchase Grail, or they've in fact purchased Grail already. They've purchased the company, and Grail was actually one of their arm, which they sort of like hived off, but they're now buying it back in. And the beauty about Grail is that it started off as an accident, because when the technicians were sort of like doing some analysis with the Illumina machine, they found some anomalies when they tested blood, and those anomalies turned out to be an early stage detection of cancer. And so they just stumbled upon this idea. There was no intention to look to try and detect cancer. It was just basically doing a DNA sequencing, and using blood. And it turns out that this information, this this DNA testing and this DNA sequencing process provides information that helps them to identify early stage cancer. So they then obviously set up GRIL, and they hived off the company to go ahead and do further research into this to see whether or not this is a business that's practical, that's feasible, and is likely to make any money. GRIL has gone off, it's done a ton of research, and it's now successfully been able to create a product that's going to launch next year actually, and it's called liquid biopsy. And this is a huge industry which has literally come out of this pure mistake. And early stage detection of cancer is a huge thing. And the more the cancer can be detected at an early stage, the more it is that if you could detect cancer earlier, the more it is that people will likely survive from cancer. It would reduce the mortality rates for cancer. For those who sort of like are diagnosed with cancer. So that's really important, diagnosing it early. So this is really great. A lot of the industry don't understand it. They just think that Illumina have paid too much money for GRIL. They don't understand why Illumina's buying GRIL. They think, why don't you just focus on your core business of DNA sequencing machines? You've got competition coming from other areas. Because they're criticizing Illumina because they're saying that their machines are not really that great at fully identifying all of the little, they're called dark spots in the DNA sequence itself. And they said that other companies that have developed machines which are able to read those dark spots, and that Illumina really should be focusing its attention on that area. And so, they just feel like, oh well, we don't understand it, and the stock just tanked. I think it was literally around here. So around the 23rd of September, the stock just tanked because people just didn't get it. And although it went up again slightly, it's still sort of down-ish. And I think I've been purchasing around this level here. But I think people don't really get it, but this is a real huge growth revenue opportunity. Illumina buying GRIL. I still believe in the company. I think the company is going to do well. It's a long-term hold for me. So yeah, moving on from that, Intelia again. I've got. I think you probably, for those who look back at my previous videos, you see that Rio Tinto was probably one of my highest stocks. Now Rio Tinto is like number 1, 2, 3, 4, 5, 6. What? I can't even count. Yeah, number 6. So I've got Intelia, 36% up, Invitae 56% up, CRISPR Therapeutics 113% up. So all I can say is my strategy. It's not complete. It's not there yet, but it's heading in the right direction. So I still stand by my strategy, or my change in strategy. And my change in strategy is to pursue innovative stocks that are investing in innovation, stocks which are investing in the future. That's my strategy, and I stand by that. And I'm going to continue to look for these sorts of stocks and invest in them at an early stage, with the hope that as they realize their goal, as they improve their technology and grow into their market space, that's going to grow my share in them. So I want to buy them early so that I can grow along with the company. So also my returns can grow along with the company. So that's the aim. Okay, now that's me done with my portfolio update. So now just to look at some of the new features from Freetrade. So I like the fact that they've got this the portfolio performance thing, which tells you how well your portfolio has done since apparently 2nd of March. Not sure. The reason why they say 2nd of March, says your portfolio is migrated from a third party onto our own platform in March 2020. So we currently show your portfolio performance over the past 6 months. We'll soon add the ability to view performance over multiple time frames. Well, we'll see. I mean, it's good. I like it, definitely. I think that's good. I still like this. Obviously, this has been there from time. Then the other thing that they've done is this thing called, I believe it's called Plus. Okay, for whatever reason I can't get it, but I'll give you an example now. Let me search for a stock Pacific. Yeah, here we go. So this is Plus. Now, let's see if it gives me an option if I say I want to. Okay, here we go. Yeah, here we go. So it says upgrade to Freetrade Plus. Get access to more features through a Freetrade Plus subscription. It's $9.99 per month. It gives you an opportunity to set limit orders, which is to set a price for when to buy and sell shares. And then it gives you access to thousands of additional stocks only available on Plus. Your stocks and shares ISA is included. Fast, dedicated support team. Now, I'm not going to sugarcoat this. I'm not impressed. I genuinely am not impressed. We already pay. Well, if you're an ISA, stocks and shares ISA subscriber like I am with Freetrade, you already pay £2.99 or thereabouts, and for that you'd expect to be given, a good service, because to be real, there are other platforms that you can get an ISA, stocks and shares ISA. You don't even have to pay a subscription fee for starters, and the number of shares available on them are significantly more. So I'm just being real, and I'm going to be real about that. So I'm not really sure. Then the other thing is, you'll not even get the stocks that are available. They wouldn't be available to you unless you get onto this Plus. Now, I just think that you're now being asked to pay $9.99 a month for this. Yeah, not impressed at all. I just feel that this is stuff that really should be offering to us anyways, but they're offering it to us for $9.99 to get access to additional shares, additional stocks. They should be building out the stocks anyways. I mean, the stocks that they have on the platform is limited. In any event, it's always been limited, and I persevered with them because I know they were adding it on. But now to just say, okay, we've added whatever we're going to add to it. Now anything that comes in, I don't know if it's everything that comes in is going to be on Plus, but clearly there are now stocks that you can't have access to unless you're signed up to Plus and pay $9.99 a month. I'm not impressed. I'm just being real about that. So, well, what am I going to do about it? I don't know just yet. I mean, I obviously the option to move platforms is there, but will I do that? It's too much hassle. Because obviously I've got my shares, and I'll have to sell everything to move on to another platform, which I'm not really prepared to do. But I'm not going to sign up to Plus, that's for sure. I'm going to stick to the standard ISA. I'm going to pay my $2.99. I don't think it's right that they charge for that. And even with that, there are still stocks that I would like to purchase, which they don't even have on the platform. I mean, and not just one, but quite a few. So I really am struggling to see the benefit of this, because if they had all stocks, then I could understand that. I would say, yep, you know what, I'll definitely pay for that. But the stocks are still very limited, and the ones that you're bringing onto the platform, you're having to charge for. No, I'm not keen on that. So that's my absolute rant, and sorry that I didn't have to. I'm not bringing you some sort of positivity, positive vibe about the platform, but it's just being real about that. So there we are. hopefully you've enjoyed this, or at least had my get an opportunity to see my insights. I would be more than happy to hear what you all think about what I have to say in this video. So of course, please do leave a comment, like, subscribe, all that lovely stuff. Peace.